Hello, everyone. Welcome to another episode of the Index Podcast, where we talk on-chain data, chart coins, and metrics that move the crypto industry. Today, I have with me Denning, Chief On-Chain Sleuth at Pantera Capital.
Hello, everyone.
JW, Lead Gitero at Nexus Data Labs.
Thanks for having me, guys.
And I am Boxer, and I'm the Community Powers at Dune. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We're acting independently of our respective professional roles. With that, oh man, I slaughtered that word. Is it Jujitero? Can you correct me, JW?
Yeah.
Jujitero? Okay, so this is a reference to JW doing jujutsu. Are you doing Brazilian jiu-jitsu or like what kind?
Yeah, Brazilian jiu-jitsu. Yeah.
Okay. Are you one of those like I don't know, do you have a black belt? Are you like on your way to a black belt? Are you obsessed, or is it like is it just a normal hobby?
Yeah, no, I mean I've been training for probably about 9 years now, pretty much every day. So in the morning usually, and then I'm not a black belt yet, almost there. I'm one right below, so hopefully
wow.
Get there one day. Yeah.
Damn, that's impressive as hell. That's I've like sometime when I was like 21 or something, I was like in a very sketchy MMA like fighting studio, and we also like there was like BJJ lessons, but at the end of the day, it was more like like go on the ground and fucking try to submit the other guy. It was like very not technical. But yeah, very very cool. Have you been in the same like dojo? Do you call them dojos?
I think most gym, I think they're trying to be more casual.
Okay.
They're not trying to stay away from being too formal nowadays.
Yeah. Okay, I see.
Try to get everyone in.
But same one for the last 9 years, or like how does this?
No, actually, that's probably what I can talk about. I took a 2-year break in between my career, around between 2017 to 19, and then that's when I started, and also traveling a little bit around the world. Don't get me wrong, I don't have a trust fund. I ran out of money living in 8-people dorm room hostels, and I bartended, moved to Europe, working, living in hostels. So it's been a journey. And then when I got back to New York, since then I've been in the one gym in New York City.
Okay, very cool. There's some interlap with like tech people or like high achieving tech people and BJJ. I feel like Mark Zuckerberg has probably popularized. Or like I know actually it was popular before Mark Zuckerberg did it, and then he also started doing it. Then it's kind of become a meme. But yeah, very 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 interesting. But yeah, with that, that's a fun side anecdote about your life. But we're of course here to interview you about your knowledge and expertise in crypto data. So maybe if you could quickly kind of like you already hinted at like, okay, you were backpacking through Europe at one point in time, but I feel like that's also relevant to crypto data, but maybe not as much as probably your other career steps. So maybe who are you and how do you end up in this position?
Yeah. So previously, I have actually 8 years of TradFi experience where I worked at a private credit fund for about 8 years. I focused on SFX securities and the loan strategies. And in between that time, I took 2 years off, 2017 to 2019. And then that's actually when I got first exposure to crypto. One of my friends, I met David, I met him in Tokyo in a hostel. And then, when he told me about it about 7, 8 months later, I wasn't interested in first, to be honest. And when I got back to the States, that was 2019. So I was working back in TradFi, and then 2020, that was heydays of DeFi summer, right? I mean, that was a natural progression looking into the good old, Yearn Finance or other vaults. I mean, original vaults back in the day. So that's when I really got into, when he got into crypto. That was a, natural transition from TradFi. I was like, oh, there's definitely a use case, I think, and then transparency. And that's when I thought about transitioning to TradFi to DeFi, but I didn't pull the trigger until 2 years ago. And, and then, since then I've been learning about more crypto data. That's when I thought the edges, right? I mean, working in TradFi, a lot of these data are gatekept behind, Bloomberg or, on the loan side, Intex calc. So I really thought it was interesting that, everything you can see, analyze on chain. So that's what I made the pivot there. And, I think one other way I learned was actually one of you guys' old guests, Andrew Hongs. He's a Byte Explorer Telegram group, and that's where I actually leverage a lot to learn all about creating the dashboard and navigating through on-chain data as well. And here I am. And, I think, right now, what do you call it? So-called, I'm in between jobs right now, and Nexus has been more of a passion project right now, where we basically carry ethos of OurNetwork, which shut down, sadly. And, OurNetwork had a decentralized model where, they have a lot of different contributors and, that's where I also learn a lot as well. And I think we wanted to keep carrying that. And I'm happy to talk more about the Nexus Data Lab.
Our network was such a golden age for all these
Mm-hmm.
like crypto data people who got into the industry in the wave of 2020, 2021. And I
Mm-hmm.
remember like early time I was a contributor for like Dex data when I worked at 0x. And at some point, Andrew pulled this learning group about our network. I think there was like a multi-series lecture series where like I was teaching about like Dex data, other people taught about like other topics, and that was like the entry point for a bunch of people that I know as well. And also it's really great that to hear that you were like maybe like the consumer, and then you were contributing, and then now you're like trying to carry the initiative on after our network is gone. So yeah.
Yeah, thank you. I mean, part of it is also we want to give back also, right? That's how I learned it, through different groups and as well as contributing. I mean, right now we are keeping more in the core contributor group right now because we're in the process of building. We kicked this off a month ago. But, I think we want to expand that and work a little bit more with the educational side as well to give back and then, help out raising new future data analysts, how I benefited just from our network.
Have you been contracting in crypto data at all, or have you just kind of like you've become a topic matter expert, and now you're you've contributed to our network, and now you're contributing to Nexus Data Labs, or like have you been working with like protocols on the side or something, just like doing kind of odds jobs, or like not
Yeah.
odd jobs, but like
So
contracting?
previous to this, I was at Galaxy, and a lot there. A lot of my main focus has been working with on-chain data. I think one of the first thing I built for Galaxy was actually looking at the Solana validator. After FTX estate sale, we had to track the validator, and then that's when I first got exposure to Dune and start building entire dashboards. Whether you're looking at from stakers perspective or validators perspective, looking at the performances and, helping out, working with the various DeFi protocols as well, looking into the various data that Galaxy was trading. And also, like I've been working on some other side projects, working with various protocols and creating dashboards for them as well. So yeah, I mean, it's comes from the love of data. I think there's always more to dig in, and I feel like I'm learning still. I feel like looking at my old queries, I'm like, wow, I can't believe I wrote it that way.
Yeah, we all have those moments. Pretty much every, actually, eventually you get to like a level. Like I feel like I was just gonna say like we have those moments kind of every 6 months, but eventually you kind of like the tables, the patterns, and then like things are very like they repeat themselves. But okay, that's kind of the missing puzzle piece. I was like, you can't just go from TradFi to our network. Okay, that makes a little bit more sense. But maybe so Nexus Data Labs is a decentralized newsletter. I see that one of our Dune researcher Filippo has just contributed to the most recent episode. So you're kind of like pulling in different data researchers or analysts from the industry, and then you're kind of like you choose a topic for any given week, and then you're kind of like, okay, we need a bunch of contributors to work on one specific topic, and then you kind of like ship a newsletter based on this. Is this kind of a correct assumption?
Yes, that's correct. That's a basic model, right? But I think we're going more take the next step of our network, right? Our network marketing has been, great in a sense that getting a lot of contributions, but I think we are planning on more curating, specific topics rather than covering all the coverages. We try to dive in deeper, and also we don't just get the contribution and and publish it. We actually look into it and edit it, as well as put it in our thoughts as well, what we think about what's going on in the market and what we should be focused on. And then hopefully our, on the roadmap, we definitely want to, at some point, if you're creating revenue, we want to work on the education, bringing these new contributors, and also potentially for their I guess gateway to monetize them as well for their work and creating a portfolio as well. So that's what's in the roadmap also.
Okay, very very cool. And yeah, definitely missing piece in the industry now with our network falling away, and I think education, kind of like training new contributors, training like in general, kind of like holding up the practice of public data science has become a little bit less relevant, like for companies themselves, as like many of them moving more towards the B2B direction. So this like kind of like public goods, community data sourcing. Like I mean, there's still like public goods data sets out there, but I think it's becoming a little bit less emphasized, especially from companies who just like frankly need to return value to their shareholders, and they can't focus on these non value contributing activities so much. So yeah, really appreciate someone taking over that spot that our network has painfully left open. But yeah, maybe let's dive into some of the most recent editions of the newsletter. I think I saw something about RWAs. So maybe what's the most interesting data points that this the edition has kind of like collected in terms of RWA data?
So this was more of a high level since it's our one of the first editions. So we wanted to cover a high level, right? I mean, I think we're looking at various markets, but we definitely plan on digging into more individually. So like we can just right now we cover tokenized assets, US treasuries, and tokenized stocks. But I think we plan on expanding that. So maybe we'll have an edition on tokenized stock, digging into various types of assets that are available, and then also looking into tokenized treasury, how they're performing. I mean, don't get me wrong, coming from TradFi, I definitely do believe in the RW space. But I think right now recent focus mainly has been more on TVL and what they're launching on chain and which institutions are coming in. And in my opinion, I think that's we're not really there yet. I think a lot of times we're still in the early stages of RWA. And one of the topic, we wanted to focus a little bit on, I thought it was interesting was basically looking into, this is only specifically focused on RWA-backed stablecoins right now for this edition, but I definitely want to expand more into various types of RWAs. So, for example, if you're looking at the total market cap distributions, RWA-backed stablecoin, obviously there's DAI, USDY that covers about 15% of the RWA-backed stablecoins. But interestingly, when you actually look into what's actually deployed, I mean, you're only looking at 12%. So that means 88% of these stable coins just sits idle. I mean, I understand they're yielding, but in my opinion, RWA, I think should have a DeFi composability. I think that's the next step in this blockchain industry where all these RWA has to be on chain and visibility, but also be able to use that as a collateral or whether you are getting a loan or depositing into the vault. So I think that was interesting that, if you're looking at major news channels, they'll talk about TVL hits a couple whatever billion or this traditional TradFi fund BlackRock or Apollo launched a fund on chain, but at the end of the day, if you look on chain, basically there's not much usage. And I think that was our main point. We want to dig in not just what's data is showing, but also be more critical of people are only highlighting certain part of the data, but also you need to dig deeper into, are they getting used? And, is this going to be more than just mirror ledger where actually you have a usage and, people are going to be able to use that on chain to be more financially savvy or whatnot.
Yeah. So if I repeat this back just to make sure I understand correctly, people are using RWAs to mint stablecoins. So I can mint DAI against some stablecoins. So what would be some of those RWA assets that I can deposit into, assumably the Maker protocol, or however they're renamed, Spark, whatever
Sky.
Yeah, I've completely missed that. But so I can, what RWA would I be able to deposit? Is it like tokenized stocks or equities or like golds or like what can I put in there?
I imagine that depends on if the vaults accept that collateral or not, right? So it depends on different lending protocols and markets, how much BD they've done with those projects and how they are assessing the risk of the assets, and they're like, okay, this is fairly safe. You're fully backed. We can accept this, and then those assets can be probably accepted.
Yeah, also I think part of that is also permission and permissioned and permissionless tokens, right? I mean, some of these tokens that are issued are stable coins or RWA stocks or even tokenized funds. I mean, they definitely have you have to have the whitelisted KYC. So I think that's when the DeFi composability comes in, right? They cannot just go deposit into a pool. It has to be curated and specifically be available. And I think, as you can see, there's a difference between, permission token usage and DeFi. For example, DAI is 52% of the total market cap, and then 40% are deployed. While if you look at USDY, market cap is 14.82%, while it's only used 2% on DeFi. So I think there's definitely a disconnect. And also this is coming from obviously the permissioned environment, right? I mean, an institution cannot just go and say, hey, go crazy and go deposit into Morpho vaults with this. It's not available yet. And I think that's the next step we should look into as an industry.
Could you clarify what does deployed mean in particular? Like say deposit into lending pool, but what else?
Just anything you can get, whether you gotta get into leverage or, you can deposit into the vault. I think that's what I meant by DeFi composability.
Got it. And then I wonder, like maybe one thing to argue for the projects that are not deployed is maybe, I don't know if like tokenized mortgage are meant to be deployed. I guess, I don't know, like are all tokenized assets meant to be deployed, or, is that a measure that is applicable for the whole markets is my question, I guess.
I mean, I think so. I mean, at the end of the day, blockchain is a database, right? I mean, if it is tokenized and available on chain, I mean, besides the visibility, in my opinion, I think why not just keep it in the centralized exchange? I mean, centralized database, right? I mean, if that's what has been happening in the past, I mean, since we were all alive, right? I mean, every banks have their own ledger, every funds have their own ledger, and we don't have exposure to it. But, I think in my opinion, I think if you're going to get on chain, I think there should be some sort of a usage. And besides that, it's just you're going to have a centralized exchange ledger, and then you're just going to put it on blockchain. And yes, I can see the positive part from that, where you can see what's happening with the assets. But at the same time, I don't think that's necessarily why we're putting this on chain. I think about when we put on chain, we should be able to go use that asset to do something. I mean, when you say tokenized mortgage, I mean, yeah, I mean, and then also if you're looking at compare it with a traditional finance, when there's a mortgage, they pull them into SFX securities, right? That kind of goes back to where I worked in TradFi, where, okay, like they securitize them, sell them to insurance companies, top tranche, and then bottom tranche to their various funds. And so why can't we do that on chain also, right? I mean, a lot of banks don't hold mortgages on their balance sheet, right? They sell them and securitize them and then move that risk profile. And then that allows a lot of these banks and funds to be able to have more cash and be able to use that as another capital to issue more mortgages or do other things.
When you issue more out of the mortgage, that's how 2008 happens, right? Like you buy a lot of
That is exactly correct. That's a product I was mainly focused on. But in high level, it makes sense, right? I mean, banks hold, they issue mortgages and then they don't want to hold that on the balance sheet. And then there are you can tranche them into different products. And then, you can sell them to various people with the various risk appetite, right? Like maybe insurance company just want stable 3 to 4% from the AAA tranche, while some hedge funds might want some lower tranche and they can dig into the collateral and make money off of that as well. So I think I think we're getting there. I think, we are definitely, I'm seeing a lot of movements in the institutional side, and I think there are more use cases, but I think we're still in the very early stages, in my opinion.
Yeah, I wonder maybe one other question that maybe we don't have an answer, but I'm also curious if you have any insights from TradFi, is how can we increase this 11.8% to have more assets to be deployed? Is it like, what's the bottleneck right now? Is it because the assets risk profile? Is it just like there needs to be more DeFi integration or like more vaults, or there's not enough money markets out there, or underneath?
Um, I think one of them I see is probably, my guess is that some of these institution issued stablecoin or RWA backed assets, they have to be KYC and whitelisted. So maybe I could totally see having more vaults curated towards that. Maybe Vault itself can have like a KYC vault only. So maybe they can have a specialized vault just for them. I mean, that's one way I could see that. But at the same time, I think it's more the regulatory concern, right? I think that's probably we need some more clarity on that. Like, are they securities, or can we go deposit? And then obviously we need KYC for some of these assets because of the money laundering or whatnot. So I think that's probably we need some clarity on that side. But I can totally see having whether Aave or Morpho have like a focused on dedicated vaults where institution clients can go use that, and maybe there will be a two-tier architecture where like, okay, there's like a DeFi part where anyone can go deposit, and there's like a if you want to use USDY or specific asset, maybe there's a specific vault that are curated to it as well. So I can see that happening moving forward as well.
All right. Is there any other, like, what other data points are you looking at in terms of RWAs that you think is worth pointing out?
I think we generally covered the high level. I mean, I guess I was looking at, so if you're looking at RWA, I dug into some more funds as well. I can share. So this was a while ago. I haven't really looked into it too much, but Apollo actually put it on Acrid. And just looking into the data, if you see the token holders, right? I mean, yeah, like it was all over the news in a sense that, oh, like Apollo put it on chain, but if you look at where they put and how token holder distributions right here. I mean, it's pretty much concentrated. They're not, this is basically, I mean, my guess is that this is definitely putting fund on chain, but there's not much DeFi usage. It's very concentrated in a sense that across various chains, including Solana, Ethereum, and Aptos. So I think partially that, and then, obviously there's something to dive deeper into more about how to onboard, how to mint, and how to burn this token, how to redeem it. I mean, I know, I don't know, it has been fixed, but I know some of the money market funds, they can only redeem around at like 5 p.m. or like business hours, right? So I think right now that slightly defeats the purpose, in my opinion, where, okay, like the whole point of putting on blockchain is 24/7. And I think generally, yes, it's nice to have these institutions coming on chain and experimenting, but at the same time, I think we do need more catered towards, okay, like how are you going to leverage blockchain, not just having that on blockchain just so that for the sake of having it on chain.
I see. I think essentially from both of these insights, what I'm hearing is like tokenization in itself should not be the goal. Like making tokenization actually work, or like using the benefits that tokenization might have should be the goal. And like it's like if your asset is on a blockchain or in a traditional database, like that doesn't really help you. You need to like do this, like you need to take out leverage, or you need to kind of like do something additional so it actually makes sense to tokenize your stock, or your like take out like RWA backed stablecoins or anything like this.
Yeah, no, I agree. I think it's not, I completely agree with you. That shouldn't be the goal. End goal should be, okay, like we can have it on chain, be able to trade freely. I mean, my own other sense is that, I think everyone talk about DeFi mullet, right? I mean, I don't think a lot of people who are going to use it, they're not going to go make a MetaMask using the ledger and deposit money in there. I think it's going to be similar to how Coinbase or Kraken's doing with the vaults, right? I mean, they're going to have a front end where I put the money, deposit, and everything works on chain. I can see that happening as well, but also tech savvy institutions might want to have it more on chain and have native data where they can dig into the products as well.
Yeah, because end of the day, like the goal for putting assets on chain is to let them earn more yields and have more flexibility of like transferring and redeeming. But if you're not achieving any of these, then we're not there yet. But I think it's still a good step. I think like all these metrics are very interesting to me because I'm actually working on a report with our Pantera research team right now, basically trying to talk about what you were talking about, which is like we have seen all these flashy news of like Apollo and like BlackRock who are buying on-chain assets, but like how on-chain are they in terms of the deployment? Are they using smart contracts, or it's still like just in the backend in the custodian centralized? On how much are being used on-chain? Redemption and transferable, are they on-chain or not? It's worth digging into because it's like we're seeing a lot of signals, but they might be still just news yet. So data like this is very interesting to surface.
Yeah, no, I think that was definitely on my research pipeline list. I wanted to dig in, maybe have some sort of RWA series where, look into, okay, like let's look into 8cred, let's look into FDIT, Fidelity's money market fund, or how are they performing, and then how much are deposited into DeFi. So I think, kind of digging in a sense that, like, okay, like let's see the reality and then how institutions should approach it perhaps, or how, crypto industry could help in that sense as well too. We can converge into the place where we all want to be.
Yeah, maybe to branch this into a more general conversation that's happening in industry at the moment. I feel like people are more and more like, honestly, I work in fintech nowadays. It's like, I'm working on fintech backend infrastructure. Like crypto's dead. Do you see like, yeah, Web3, like gaming, all of these, like more like, I don't know. I think the entire theory of A16Z's, like Chris Dixon or however he's called, like read, write, own or whatever, is like completely disproven. Has not played out at all. So I don't like, how do you feel about this, Denning and JW? Maybe JW, you can go first. Like, do you have like the same sentiment of like everything's fintech now, or do you still have some hope left for Web3, or like maybe not hope, but I don't know, an expectation that any other use case might be useful?
I personally think one of the reasons that drew me was because of the traditional finance to DeFi transition, right? And I think definitely we are seeing that merge, in my opinion, where like, when I look for like a crypto jobs, blockchain related data jobs, I mean, a lot of them, institutions require like CFA. And then, like I think there's a definitely overlapping in between in that sense. They're asking for it. But at the same time, I mean, I don't know. I think there are other, like, let's say NFT, I think there are some usages, right? I mean, I think a long time ago, was it a index, I think it was like basically index co-op. I think they did something with you hold an NFT, or I think EtherFi did it. I think I still have that, EtherFan. I think they're NFT. So I think there is some way or to reward holders, or like, like I think I see the use case of like artists having NFT. I know people are not really doing that anymore after the whole meme coin craze of the celebrities, but I think, okay, like what if I love this artist, I buy the NFT and I get exclusive access to certain thing at the concerts. Or I mean, I think there are definitely use cases, and also Web3 gaming. I mean, I don't know how I feel about it right now, because I feel like that phase has been kind of like died down. But I think, in my opinion, I think there will be new way of their use cases with blockchain. And I just don't know what it's going to be, in my opinion. I think it's going to be something that we can't even imagine right now, right? I mean, someone's going to come up with an idea. I think there are usages, and there could be a way to be blockchain could be leveraged. But I think we're still in the experimental phase, in my opinion. So I'm excited for it to see. And I agree with you. I don't think it's going to be fully DeFi. I think there will be other use cases, and we'll just have to wait and see. Or if you guys have any idea, you guys should start something.
I think it makes sense because like we always said that like blockchain, we are trying to build the future of finance. And if I like zoom out to look at the first principle of like why blockchain exists, it kind of creates the anonymity. It creates like basically a sense of having things that's not centralized and that can be just like censored or like simply revised by a single authority. And that kind of like works as the best attributes for finance. And also the other part would be like privacy. And I feel like as of day to day, you don't really care about privacy that much yet. Like people are still having their Instagram profile public. And like on TikTok posting about all their daily lives. So it's like, do people really care about privacy? Maybe at one day they care about like, yeah, like not yet. But like if one day people care about like data not controlled by Facebook and they realize like all this stuff like shouldn't be controlled by one single entity, then they might start using like blockchain based crypto social products. And like, I think that's why crypto social failed so far. Cause like people, it's not really a demand yet, but I could see it become a demand on the rise with maybe AI. I don't know, like if, like OpenAI already signed a contract with the US government and like Anthropic was against it and they kind of now getting sanctioned by the Trump administration and stuff. But like, if any of these superpower company can control all your data and they can simply sell that to government, or like if any negative example come up and people really realize how bad it will be, maybe there will be a use case. I think blockchain always exists when things collapse, right? That's what people say. Like when the financial system doesn't really work well in those countries, it get adopted. And now like the world is kind of in chaos and like people are putting more money on chain. That kind of makes sense to me. So I think other aspects of blockchain also will have to be adopted when things are falling apart a little bit.
I like that take because we're going back full circle into cypherpunk values now, right?
I don't
Yeah.
see that trend playing out in the wider industry, but I'm glad you two are not working in fintech. I am. It feels very much like financial use cases have so far been the only use cases that crypto has really been useful for, and everything else was like, sure, we got some initial speculation and like there was some hype, but nothing really sustained, no sustained usage. So yeah, the jury is still out. I mean, JW seems to, your thesis is basically we're still early. I don't know about that, but we'll see. We'll see where I don't know where the journey takes us. With that, maybe there's another use case next to stablecoins, which is very prominent and which you've already pulled up here, which is prediction markets. So you've recently also had a edition about prediction markets. So maybe what was the most interesting data findings from this edition?
Yeah, so I think we started with also general high level, where how much prediction market grew, and then obviously everyone's eyes on Polymarket and Kalashi and some other prediction markets. So generally we covered volume. I mean, our initial thoughts were okay, like our initial focus has been mainly Polymarket picked up after election 2024 U.S. election, and then how it has changed. Like, does it have a product market fit? And then it is still growing. They're hitting weekly volume highs as well. And then now if you're looking at it, like we realize that actually 64% of the volume is up for the sports. So, I think there is pivoting into more of the area of the DraftKings and all these various, not gambling, but, like
It is gambling.
So I think it is definitely pivoting. And then obviously there are various markets popping up. And I know people are also talking about various use cases, maybe use it as an insurance or whatnot, but I don't think we're there yet, but I think I'm just interested to see how that's going to work. And so one other thing was I did this research a little bit also. So you can basically look at how much USDC is held in the Polymarket proxy wallets. So you can actually on Dune, I did the dashboard also on the side here where basically you can go isolate all the proxy wallet that are created, and then you can figure out the USDC balances. And then so you can see it's about $365 million. And I know they have they might have a partnership with Circle, but my guess is, and this was before I wrote an article really quick where I wanted to see how much USDC it actually holds. And there is a wallet, and there's also, if you add that with open interest, I think last time it was about $500 million, but I think it's probably higher by now, so if you think about $500 million that's sitting on the Polymarket, USDC, and then is Polymarket benefiting from it? I think the answer is yes. I think Circle probably gives some sort of a rebate or whatnot, because if you think about, $500 million, 2%, that's a sizable revenue per year, right? But also at the same time,
is this purely theoretical speculation, or are you basing this on any like evidence or rumors that you might have heard?
I mean, I think this is just a speculation. I mean, if they hold $500 million in USDC, I would assume that they want to capture some sort of yield as well,
But
right?
it
I
is
mean,
just sitting, like it is just literally sitting in a smart contract. So like, so
Wait, sorry.
there's two parts to this. So like, one
Yeah.
is the balances that sit in users' wallets,
yep,
which but like I'm not a user of Polymarket because I'm in Germany and it's banned. And theoretically, if someone has a USDC balance instead of Polymarket, they don't get any yield for it. So like, there's no yield pass through going there. And then like the other part of this is like the USDC that's locked inside of the Polymarket smart contract, and that's just literally sitting in the smart contract, and it's not
yep.
like doing anything anywhere. And you were saying like for maybe the part that's locked in the smart contract, where like this is actually wagered, this is like in open positions at the moment. There might be, or like it would be an interesting business model by Polymarket to basically like try to get a deal with Circle to like get yield for this. Because like Circle is now a regulated public entity. Like we can look into their like their quarterly reports, and like we can probably like there's no position in there that would like, because we see the Coinbase position, which is like listed on a cost somewhere, which is like the yield, like because they have a deal with Coinbase that is structured in a similar way, where it's like the USDC that is held on Coinbase, for that USDC, Circle kind of like passes through the yield that like goes to, that would usually, or like actually how does this the yield that Circle generates with the balances that are held on Coinbase, it actually passes through to the users of Coinbase, and then I think Coinbase takes like a small percentage fee cut on top of something like this.
Yeah, so I mean, again, my speculation was like, what's stopping them from having, as a platform? I'm not talking about users from this perspective, right? As from Polymarket, and you can go to Circle and say, hey, like we have this amount, you're using USDC. And one of the reason this popped up into somewhat more of a research question was when Hyperliquid did their, auction for their stablecoin, right? I mean, okay, like what's stopping them from whether one, creating their own stablecoin and capturing all the yield? I mean, that would be a lot of work, or work with, any other stablecoin providers and say, hey, like what can you give me if I switch all the USDC collateral that's held in Polymarket into something like your stablecoin? And, my answer would be, okay, like they probably want to give some sort of a fee, rebate back to Polymarket. And I thought that was a interesting topic that people haven't talked about yet. And I mean, my speculation is that since none of those materialize, I would assume maybe they have some sort of a deal with Circle.
It's an interesting thesis. I don't know if Circle would have to report this in their public earnings report or not. Yeah, somebody should ChatGPT this and find this out. But yeah, it's a very interesting question. Whether like it would be a lot, or like it would be a very straightforward, or like not straightforward, but it would be an interesting business model for Polymarket to basically capture the yield of that 500 million that's sitting there, instead of like starting to charge fees or something like this. And like,
yeah,
I guess what's the incentive for Circle to like make this deal happen? It's like, yeah, more USDCs being held in circulation, or like more USDCs being locked up somewhere. So like it's not out of the picture. That's wow, I never thought about that.
And I guess maybe Polymarket might say, oh, we're gonna go with, I don't know, Ethena, or switch to UST, to go to Tether, and then they can be our main collateral, and then maybe that's another thing that might persuade Circle to, okay, we'll give you some sort of a rebate on that end. So that was one thing. That was just my initial thought, and that's one of the reasons I decided to dig into how much is open. If you combine open interest plus what's held in proxy market, that kind of shows, okay, like this is a USDC that lives inside of the Polymarket ecosystem, and that was my initial speculation and thoughts in the research pieces.
Mm-hmm. Yeah, it's a very interesting thread to go down on. My initial reaction to this would be like, having looked at the Polymarket contracts in depth a lot, like the switching costs would be monumental for them. I think they would need to redeploy all the contracts. I think a lot of the markets, like essentially they would have like old markets which would work on USDC, and then they would have new markets which would work on USDT, and then like need to get your users to like convert your USDC on, let's say they switch to like USDT or whatever. And I think Polymarket basically has like harder battles to fight at the moment, which is like they have like infinite venture capital money anyways. So like those whatever, like 2% on 500 million, that would be 2% of 500 million. Somebody with quick math.
It's like
10 million, something like this.
Yeah, 10 million. Yeah.
Yeah, 10 million, 10 million a year. I think compared to what they raised, is like it's not a drop on a hot stone, but like I think it's like not significant enough for them to like really go down this avenue very far right now. Of course, like in the future, if there's like 10 billion staked on Polymarket or something, then like suddenly we're talking and like this is getting interesting. But I think for now, like probably the like, I don't know, like that's my initial gut feeling here is that like probably it's not worth it for them to pursue this right now, even though this might be like a long-term interesting strategy. I think like right now it's like they're just fighting for market share so hard with Kalshi that like any friction you introduce into your business processes other than just kind of like scaling what you already have, what's already working, is like a real problem. Like you don't want to like basically disrupt the hockey stick growth at all, if possible, if somehow possible.
No, I was just gonna add, but they did add all the fees in most of the markets, though. From a news I read yesterday.
Oh,
maybe they're getting some pressure to make revenue.
Yeah. As we were speaking, also like Kalshi raised another 1 billion with a 22 billion evaluation on, I think, a pretty good amount like revenue, like $1 billion level, I think.
They introduced effective March 30th, 2026. So they will introduce like 1.80% peak effective rate for crypto markets, 0.75% peak effective rate for sports markets. So there's like a dynamic aspect to it, but interesting. They have so much venture money. Like, why are they focusing on Miss VC? How would you like? No, not putting you on the spot. Good that Hildobby isn't here because I think Dragonfly is genuinely an investor. But yeah, that seems odd to me that like they're getting in, like the investors must be pressuring them, or like they must have some internal like idea of like we should turn on these fees. That's interesting because like they're sitting on so much venture money. Like there's no way you tell me that like they've already burned through like even 50% of what they raised recently. So like what makes them like generate however many millions of fees? I guess maybe they're preparing for future raises.
I don't know if they still have a giant treasury. Like, I mean, I'm sure they have enough money, but all these companies who are buying the DCM license or like the whatever license you need to operate in US is like 50 million per one license. And so I think you need like a few of those.
I mean, they raised 2 billion. Like, like I don't like this is basically like as much infinite money as you can have. Like, as a lawsuit. VC. Yeah, I mean, okay, the lawsuits, okay, I can see, but like, I don't know. Has anyone have we seen queries on like the fees that I guess they're only in effect starting next week, so there can't be any queries. But it's going to be very interesting to observe, basically, like how many fees are they actually generating here? Like how does this even make sense in the scale of like the venture investments? But like, I don't know.
Well, Kalshi's annual run rate is 1.5 billion from my quick search.
Sorry, go again.
So Kalshi's revenue run rate is 1.5 billion per my research.
What is the revenue run rate? What does that mean?
I need to Google that too.
That's a weird term. Like I don't know what that.
But it would be actually interesting to see once they turn the fee on. Maybe I'm sure Dash will come up with an updated dashboard, but I'm sure it'll be interesting analysis to see how the market share changed after the fee turned on, and like how is it the volume is going to affect the volume as well as how like maybe compare that with the fee, how much to make. Is it actually the fee make sense for the loss of volume, or is this gonna, is gonna push away from Polymarket? I mean, it would be interesting analysis to do that actually after once the fee turned on and we have some sort of data.
Yeah.
Okay, run rate means basically they generated 263 million in fee in 2025, but because 2025 they only turn on fee for a certain period, you have to basically multiply that by like number of months as a projection.
Yeah.
So the
Just
projection is
annualize
like
it basically.
yeah.
Yeah.
He
Okay.
generated 263 million in revenue. Really? Wow.
Across the month they were charging, and so the multiplier was 1.5 billion.
That's a lot. I did
No
not.
wonder
I
why.
did not expect that level of like revenue from these. Okay, then I guess it makes sense.
I mean, no wonder
Yeah,
why all the centralized exchanges are popping up prediction markets now.
Yeah.
Yeah, I mean, it's bigger than what Uniswap generate for a year. I believe it was like 100 million plus scale. But I think like if you look at the meme coin trading apps, it might be similar or even higher than what prediction market. So if you think it's as a like gambling platform, it's not that crazy. I went to one Golden Gate Warrior NBA basketball game and I lost 175 on Kalshi. And that's, that's a lot of fee there too.
But that's not going to Kalshi, presumably.
No,
Only,
of course.
like somebody
but they are
else
taking a
wants.
fee out of it. Yeah.
Yeah, of course. Yeah. Still, that seems so much. Okay, interesting. We're learning. We've covered prediction markets a lot here, but apparently we're still learning new things about it. But
Sure.
it's like such a that is an absurd amount of money. That's more than whatever. Let's move on. Or like let's not move on. Maybe I think you also had like some interesting statistics about like the interplay of Polymarket and Polygon in the edition. So maybe if you want to double click on those, that would be great.
Yeah, so I kind of got curious. I think a lot of crypto Twitter recently talk about Polygon as a stablecoin market, settlement layer, and then they're trying to rebrand it. And I always go into these like, when you go to crypto Twitter, I go in as a skeptic, and I mean, I do believe in the industry. Don't get me wrong, but I was kind of curious, so I actually created this dashboard in Dune, looking into I'll pull up the dashboard where I was just comparing. I was able to isolate all the smart contract on Polygon. You guys nicely labeled it on Dune. So I basically isolated all the smart contract and then using the transaction ID and logs to figure out transactions to figure out what percentages of the Polymarket take over in entire Polygon network. So interesting thing is, I don't think people talk about it, and I'm trying to get people to talk more about it, or prove me wrong on the data how I did analysis. Maybe I'm missing something here, but going into that, I think I ran this 6 days ago. They're using 52% of the Polymarket transaction was actually on Polygon. That was a percentage of the Polymarket transaction that's related to it. And if you actually go into gas consumption, you can see it's 75%. And you can look into more gas fees or whatnot, but you can see that a lot of these compute unit actually goes to Polymarket. So I think, there's a couple things I wanted to raise from this. And my question is, okay, like, how is it going to affect, everyone speculate the Polymarket token. How is it going to affect? Two, and maybe it kind of goes back to maybe Polymarket's, priority is not having their own chain, but what if they have their own chain and be able to capture some of these gas fee back into the users? I mean, that's something to think about. Maybe, as you said, maybe their focus is not that right now. This is probably more of on the bottom of their priority list, but I think maybe Polygon should be, address this, or maybe they should be looking into this, right? I mean, this is definitely a single app risk where, okay, like what if they decided to leave and, or in a positive note, what if they drop Polymarket token on Polygon, and is it going to affect the price of Polygon through the usage and trading? So I think it's something, I'll do a lot of these data analysis based on like kind of curious, and then dig into it. And then that kind of comes up that, always have a more follow-up, research topic questions. So that's one of the topics I dug into, and I'm kind of curious to see what you guys' thoughts were on that.
This is really crazy data. I mean, it's kind of defining that Polygon now is the prediction market chain, and it's like pivotal moment for like if Polymarket and them can work out a deal to keep them on the platform. I my guess would be like they will have to provide a lot of incentive, like with tokens or something. But otherwise, I'm also curious, like, wonder if you do that by user count, it may also show very prominent numbers to show like like the
So
majority. Yeah.
So I do have a daily active user, but this is a
Hmm.
little tricky because
Oh,
it's only
interesting.
20%. But the thing is, I only isolated the traders. So I don't know, like you right, like so, like you can get all the proxy market addresses and then just
Right.
isolate that. That's 20%. But
Right.
also, I guess there are other smart contract that runs behind it that's related to Polymarket. So I mean, it would be interesting data
Right.
to dig in. I wasn't able to
Right.
bridge
Right.
that gap
Right.
yet. Yeah.
Yeah, I see. That makes sense also that the daily like user might be a harder metrics because like it also depends on how much Polymarket puts interaction on chain or not. And to measure the usage, it could be very like affected by how many are on chain, how many are off chain. It doesn't really fully
Everything is
define.
on chain. Everything is on chain.
Everything's on chain. But
Yeah,
like if I
everything's
go to
on chain.
Polymarkets and like browse through markets, just didn't
Ah,
land a transaction, right? Like
I mean,
it,
of course, it's not gonna. What's gonna be
yeah,
on chain?
yeah, yeah.
But the
Yeah, yeah.
execution, like
But it's like
that's on
I
chain.
think the gas consumption one is like actually real economic measure for a chain,
Yeah.
and it's like pretty crazy right now. Like so for audio listeners, you're looking at a up to the right chart for gas consumption for Polygon, and 80% I would say looks like is all Polymarkets as of recent months.
Yeah, and then Boxer, maybe if you have some time, you can look. I'll send you the query and see if I'm missing anything.
No, maybe
Just wondering.
I was wondering if you for the transactions, do you count deposits into the proxy wallets?
Let's see. So we can go into that actually if you want.
I mean, we don't need to debug queries on the podcast, but
No,
uh,
no. So I'm just
uh,
using this contract mapping with anything that's
ah,
Polymarket, and then I'm actually removing that's proxy wallet factory or anything proxy, creating the
okay.
wallet itself. So
I think if we look a little bit deeper, so what you're not right now doing is you're measuring interactions with the smart contracts of Polymarket. I think
yep.
what we'll find when we actually include, like, you could look at the USDC transfers into proxy wallets, and then you'd probably find that even more, like probably like 10% more or something like this. Just the USDC movement in and out of the proxy wallets, I would imagine, is like
Yeah.
quite a significant thing
Mm.
as well. But yeah, I mean, Polygon has rebranded itself as a stablecoin chain, and they're moving stablecoins around just inside of Polymarket. So I guess it works.
Is it understanding that like the proxy wallet movements are the deposits?
I think this is a factory, so this is when they create the proxy wallets. So, but I mean, we can probably, filter out a little more maybe to be more exact on actual transaction
But
volume.
like,
But I mean, right? Mhm.
aren't those also polymarket activity? Like, why were you filtering out? You know?
You can just kind of hit the general, I think, wallet factories of like Safe and stuff like this. I think that's maybe why he filtered this out here. I think there was like, yeah,
Hmm.
Yeah,
it's a little
and
bit hard to like definitely pin it down because it's the same. It's just the Safe
Ah, okay,
factory.
okay,
It's just the same. Like they're literally using Gnosis safes in the backend. I mean,
okay. I
some
see.
version of them.
yep. So yeah, I mean, I think those are some interesting topics that, like, and then just looking into this, I mean, whenever I try to post this, and then try to like get some more questions from other people, I haven't really gotten much answer from a lot of people who believe in Polygon. So we'll see how
Yeah.
that works. And then, just quickly, this is interesting because since we are focused on on-chain data, we pull the volume. This is a little tricky to pull because right now it's only on DFlow. I think they were using Jupiter. Kalash was using Jupiter and DFlow, but you can see it's only under
Mhm.
0.3% of the transaction volume from Kalashi actually is on chain. So, I mean, it's hard to verify. And I mean, prediction market is not all, doesn't have to be on chain, but I think it's one of those things that, if you're thinking about on chain economy, I think that's some metrics to keep that in mind.
Yeah. How did the Polygon token rebrand? Does anyone remember? They like
There's
their
a
token
poll token. I think it was Matic to poll,
Paul.
I think.
Oh yeah, now I find it. Okay. Yeah, token ain't doing too hot. I was just curious after this conversation of like, is this bullish or bearish for like the Polygon blockchain? And I guess it's pretty bearish because I think Polygon recently, or like a couple months ago at this point, had an outage, and I think Polymarket said that they were gonna migrate away, or like essentially they're evaluating options or something like this, which like hinted towards like, okay, we're gonna stand up our own chain, which we all know is like it's not a big deal nowadays to like make up your own blockchain. And like, I don't know, if you run with a centralized sequencer set, it's probably like even some good properties for no, actually, I guess Polymarket has like some kind of decentralization angle where it's actually good that they have like a somewhat distributed validator set with Polygon. So they wouldn't need to migrate to a fee cheap or like a cheap fee chain that still is like somewhat decentralized. Okay. Is there Polymarket market on whether Polymarket moves the way?
Maybe they should. Are they gonna move by 2020, end of 2026 or 2027? Maybe that's another market idea.
Probably is a market, no?
Yeah, that would be interesting to see.
Let's see. I don't find anything. But anyways, we're not gonna find that on a short notice. The search is horrible. But I mean, I guess from this data point specifically on the culture's activity is very much compromised of on-chain activity. Can we? I guess it's like it's very straightforward what the reason for this is. It's like the way easier way to interact with Kalshi at the moment is just download the app, register, and trade. Right? Like I don't like I would want to read something more into this, but like it just seems like hey, Kalshi's official and good way to interact with the platform is like through their like certified or like through their like official ways. Do I
app.
even like do I have to KYC to interact with DFlow and Jupiter?
Yes.
Yeah.
No, not for the. I don't know about DFlow and Jupiter for Kalshi, but in the Kalshi app you have to KYC, and then you just
but that would be like the regulatory arbitrage. But I don't think that would be very weird if they're like allow that to happen.
I also don't know about the latency for trading on chain, and then it has to hit their off chain API, and like what's the benefit of trading on chain if the settlement is off chain?
Yeah.
Maybe that was just set up for like the quant traders or something, try to arbitrage, maybe just using the API to get, maybe arbitrage between different prediction market. They don't want to go use the front end. I mean, I'm not really sure, to be honest, but that's my guess where they don't have to actually interact with the front end, maybe some automated bots or, traders.
Yeah, I mean, that's what Kalshi already exposes like a set of APIs that you can just interact with. You don't need to go through through the kind of intermediary of on-chain to do that. So
the only explanation can be like maybe there are some on-chain markets that's settling on Solana, or there might be like incentive for trading on DFlow or Jupiter.
We still, I think we looked at this last time. We looked at this. There's no incentives. There's nothing whatsoever. There's no markets. Kalshi has zero trace on Solana other than the deposits into like a router contract, essentially.
Okay, that's interesting.
It is a mystery.
Wonder what the reason is. Or is it just because they want to say they're on chain also?
Yeah.
But yeah, it's a distribution. Like it's very smart. Like Kalshi's whole strategy is like they even have a like deal with Coinbase, I think. Like you can trade like
I think
predictions.
Robinhood is what you're thinking, maybe.
No, I think Coinbase as well.
Okay.
Or maybe Coinbase even bought the prediction market themselves. There's like an ex-tuner who like joined the startup and then immediately got bought up by Coinbase. It's very no, they don't have integration. They just Kalshi partners with Coinbase to custody USDC. That's the thing. But on Robinhood, yeah. So that's still the distribution strategy. It's like Kalshi partners with other people to like expose their markets on their platforms, which in turn kind of like gives Kalshi a distribution advantage. And like if you own the end, like I mean, they're sharing the revenue for these, but at the end of the day, like they like they lock in the network effects of like there's more liquidity, there's more kind of like money flowing around culture in general, which is a net good for the platform. I think they even like they convinced some of the traditional like sports betting platforms in the US to even like list culture bets as well, which is very interesting. So like this is purely like distribution play, and the same is true for like DFlow and Jupiter. It's just like let's try to like tap into this like hot ball of money that is flowing around on Solana, usually in the form of meme coins, but like maybe we can convince them to like use our prediction markets instead. So I think that's the rationale.
Maybe someone should build the prediction market aggregator, like Matcha, or
there's a lot of there's a lot of startups that are trying to do this. I've literally talked to like 4 or 5 different people that are all, and like I didn't seek them. Like I'm just randomly at crypto events. It's like, what are you doing? It's like, I'm building a prediction market aggregator. And it's like, oh, interesting, and never heard of this. Yeah, it's a very common thing, but at the end, I don't really believe in that, to be honest. I've seen like one that's like like there's like copy trading platforms, the same way you can like copy the trades of like how's the senator in the US called? That's like always ahead
the
of
Nancy
the market.
Pelosi.
Yeah, exactly. So like the same way you can copy trade Nancy Pelosi, like they're like, okay, you can like search for whatever an influencer that has like a group here, and like he can give you the signals, or like you can just set of like, here's a wallet that has been like very successful, and you can use that. And it's like there's like a bunch of different configurations, but at the end of the day, I don't really I don't know. I don't really see the business case. Like I think at the end of the day, the like direct, like actually if you do a better search and a better interface, maybe it's kind of like wasn't there like an NFT marketplace aggregator that eventually was like better than OpenSea and Blur and like all of these?
I feel like you got sent into a rabbit hole, Boxer.
Sorry? Yeah, this episode has been full of rabbit holes. It's like very interesting points that you bring up. Honestly, it's like very fundamentally thinking about the projects, and then just kind of like, okay, what is the like second order effects of this data? Like, what can we actually learn from this? Which I think is like a very refreshing take, instead of just being like, there's like 20 USDC on Polygon, like great. I think like going one step further, that's always like it's the harder part of being a research analyst.
Yeah, I mean, I think just generally, it always, when I first was learning, it was more about like high level data, like on-chain metrics that, like TVL, or whether that's like a number of users. But I think once, I got used to it, I'm like, okay, like I'm curious about this. Like I'm looking at this and I'm like, okay, maybe, whether that's a Polymarket or any other Polygon or RWA, like I want to dig in deeper into like what's happening. I think that's kind of part of being a more, like of a data analyst rather than just like a visualization person, right? So I think that's what I've been enjoying. And, I think I'm happy to, talk to you guys more later on the side and talk about research ideas or whatnot as well. Definitely interesting. There are a lot more gold to be dug in the on-chain data world.
Yeah, definitely.
I think besides being a good analyst, he's also just, one of the few people working in DeFi data that actually studied finance, so he knows a lot of things behind the scenes.
Yeah.
I mean, we're seeing the convergence, I think, as I said, I think a lot of institutions I talked to recently, they are looking for data, but even like some of the big crypto companies also, I mean, they're, at the end of the day, some of them are still a trading firm, and a lot of the people have background of the traditional finance. And I think on-chain data is a missing link, in my opinion. I think there's definitely a data gap, right? I mean, there are, these companies have data scientists and, data engineers who can pipeline these data, but also in my opinion, I think on-chain analytics is its own skill set. And hopefully, in the next 5 years or so, I think that gap will bridge, and then we'll see more of the on-chain people working for big fund or, like a traditional finance fund, or, maybe, the bridge. I think that we'll see more of that convergence going forward.
Yeah, I would agree with that. And certainly like a more traditional finance perspective is very much needed and appreciated in the market right now. So thanks for doing what you do. I think this was a very interesting conversation with a lot of deep rabbit holes, but I think I've certainly learned something. I hope our listeners were able to follow us on these rabbit holes and also able to learn something, or like learn how like we start thinking about these things. Because I think a lot about like what's interesting, or like what can be interesting about this podcast is like seeing other data people operate. Basically, like, okay, I see like a point of data, but then like, okay, what are like the second order effects, and what other things like might be affected by this, and like how does maybe the market respond to this as well, and like has the market even already seen this? Where like is it bullish or bearish for Polymarket, Polygon, if I don't know, 75% or like 50% of their transactions and 75% of their block space is occupied by a single entity, which has already said that they're gonna move off. Probably a little bit bearish, but I don't know. Yeah, just thank you. Yeah, thanks for coming on. This has been quite entertaining and quite like insightful hour for me. My English is struggling. But yeah, you can follow JW on Twitter, and of course do subscribe to the, I guess it's also a newsletter. Do you have like a Substack, or like how you're distributing the Nexus Data Labs?
Yeah, we have a Substack and also a Twitter page. So we're posting the article on Twitter and X, and then also Substack. That's our main distribution channel. And also, feel free to reach out if you guys have any interesting ideas. I'm happy to dig into also. I'm always looking for more interesting topics.
Stablecoins, of course. I might reach out to you afterwards. But okay. Thanks so much for listening to the Index podcast. I think we'll see all of you in 2 weeks. Oh, we didn't explain why Hildoby isn't here, but yeah, he's unfortunately not feeling well at the moment. So we had to do without him, without our Frenchman. But hopefully in the next round we'll be complete again. Is there anything else you want to leave us with, JW?
Oh, I just want to say thanks for having me. And then it was a definitely interesting conversation to talk about whether that's a data or, I think for how things are changing in the blockchain space as well. So that was definitely helpful for me as well. And thanks for inviting me here.
Of course. Thank you, everyone. Bye-bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar, we call them out and set chart crown on fire. Index podcast, crypto data empire.